So today we're going to do a Pepsi versus Coca-Cola when it comes to being a dividend investor. Now, I personally have both of these currently in my portfolio, and I'm deciding on whether I want to keep both of them, hold on to one, or maybe get rid of both of them altogether. So we're going to jump in onto a website called seekingalpha.com. We're going to kind of jump into all of these little details when it comes to the dividend portion. Now, as somebody who talks about investing, I always got to let you guys know that, of course, these are my thoughts when it comes to dividend investing and being part of these different stocks. So keep in mind that there might be a lot of other decisions when it comes to buying into a company or selling out of a company as well. So with that being said, let's go ahead and jump here on the computer directly. So like I mentioned, we are on a website called seekingalpha.com. I love using this website, not affiliated with them, but they do give out some great information on their actual platform. So right now I have Coca-Cola up currently. And so what we're going to do is we went into the dividend tab right over here, you can see, and they start out with the dividend scorecard. So this is going to give us a lot of great information when it comes to actually getting an idea of what's going to be available for us on, the dividend side of this actual fund. Now, like I said earlier, there's a lot of other things to consider. I just want to go over the dividend portion with these stocks. So we're going to do first a side-by-side comparison for the most part, one at a time as far as what's available on each stock, and then maybe what I'm going to end up going with at the end of the day. Because like I said, I have both of these available currently in my M1 Finance account. And as somebody who's been kind of trying to cut back on which stocks he has, this has kind of come into a little bit of a contention of should I keep both or should I just have one and kind of really hone in on what they offer. So going over Coca-Cola, first and foremost, of course, is the current dividend yield, which as of this recording is 3.34%, which the annual dividend comes out to $1.64. Now, they do pay out on a quarterly basis, which ends up coming out to about 41 cents a dividend. Now, their payout ratio currently is quite high. So this is at 87.11%, which is fairly high when we typically are looking for about like 60% or less, I would say, on any given company. They have had a dividend growth for about 57 years. So that's a dividend king. Let's see if I could draw a crown here. I think that looks like a crown. So dividend kings are any company that pays dividends for over 50 years. So it's a pretty elite list of companies that are on there. It's obviously a really tough thing to be able to do during all these different types of economic downturns that we have in the market and in the economy. So that's a really great thing to consider when you're looking for a company that is paying for that long of a period of time. Now, the last thing we're going to look at here is going to be the 5-year growth rate. Now, this is how much on an average over the last 5 years they've been increasing their dividend rate. So this is at 5.57%. So to give you an idea of what this all means, let me clear this off here. I'm going to go into what they call the dividend news here on this account. So right over here, we're going to jump down and we're going to see right away, this was the last dividend increase was right over here. So this is February of 2020 to give you an idea. So it says Coca-Cola declares a 41 cents a share quarterly dividend, a 2.5% increase from the prior dividend of 40 cents. So what it's saying is that the actual amount that they're going to be paying is worth more for you. So what I'm trying to look at here is trying to make a determination of, is this going to be something that's going to be worth it long term if they're going to be increasing their dividend? Because increasing a dividend every single year is fantastic, because that means you're going to be making more money if you're holding on to that dividend for long term, especially because you're not doing anything for it. Now, 2.5% is not great. That's kind of just keeping up with inflation. So your money is kind of just worth the same every single year if that were the norm. And so what we're going to do here is I'm going to clear that off again, and I'm going to scroll down to the last time prior that they did this. So right over here, it shows that, again, on February, but this time in 2019, they actually declared a share of 40 cents a share, which was the previous prior, which was a 2.6% increase from the one prior to that, which was 39 cents. So even though the 5-year average is a decent amount, if we look just in the last 2 years, that dividend increase has been pretty abysmal. Now, the February 2020 is somewhat understandable because of the way the market and the economy was, but the February of 2019 is a really low percentage in comparison. And then if we go down before that, we can see, oh, my lines were drawing. This one was actually made in July of 2019. So this one was actually done a little bit sooner. And you can see this one was actually 5.4% increase. So technically speaking, right over here, we're going to see this was July of 2018. And then you can also see just a little bit further down, this one right over here is also in 2018 in February. So they did 2 dividend increases in one single year, which is a great thing because if you obviously add those two things up together, you're getting a really high dividend increase in one single year, which can be really beneficial for any shareholder. So when you look at it this way, you're trying to have a good understanding of, is Coca-Cola going to be able to increase my dividend yield year over year at a good rate, so that way my money doesn't become less valuable over time as far as dividend payouts, or are they able to continue on with something closer to this? Because even if they only did the 5.4% in 1 year, that would still be a much better lookout than, you know, the 2.5% that they did in 2019 and 2020. So with that kind of being said there, what we're going to do now is going to go ahead and jump over to Pepsi. And let's take a look at Pepsi here as an example. So Pepsi has a current dividend yield of 3.09% as of this recording. Their annual payout is currently $4.09. They do pay out on a quarterly basis. So that will equal out to $1.02 per share. And then now you can see right over here, their payout ratio is currently at 76.81%, and they've been paying out dividends for 48 years. So just 2 more years, and they will also be considered a dividend king. As of right now, they are considered a dividend aristocrat, which is being paid out dividends growth for over 25 years. Now we can see here for the dividend growth on Pepsi is actually much higher at 8.41% dividend growth rate. Now, before we kind of do a real side-by-side comparison on some of these, I do want to go into the news here as well, kind of get an idea of what those raises were. So we're going to see here towards the very top, this was in May of 2020. Right over here. So they had an increase of 7.1%. So they went from 0.955 to 1.0225 a share. So fairly significant, especially with everything going on. And then if we scroll down, we can see here in April of 2019, this one was actually a much lower increase at 3%. So somewhat comparable to what Pepsi or what Coca-Cola had back in 2019 as well. And then if we scroll down just a little bit further, we can see here in May of 2018, we actually had an increase of 15.2% from the year prior, or from the prior dividend, I should say. So that is a massive increase year over year. So as a quick example, if you had 1 share of Pepsi, you were getting 80 cents a share. And then all of a sudden with this 15% increase, you were automatically getting 92 cents a share for doing absolutely nothing else. If you didn't buy any more stock, you just held on what you had, you got essentially a 15% raise on the dividend income, which is probably more than most people are making as a raise at their regular jobs. So it's a pretty fantastic way to go about actually essentially increasing your amount that you're having coming in. So as long as that company can keep something up to obviously a good caliber, not necessarily saying 15% every year, but you can see here, even the year prior for Pepsi, it was a nice 7% as well. So if we're comparing these two companies, so if I go back to the main scoreboard, so if we're just comparing Pepsi and Coca-Cola, I can just jump between the two and we can see the stats right over here. So first and foremost, we can see here that Coca-Cola has that 3.34% dividend yield, where Pepsi actually has a lower dividend yield at 3.09%. Now, one of the biggest things when it comes to me paying attention to these dividend yields outside of everything else, just looking at the dividend yield, Coca-Cola definitely is winning in that regard because they are, of course, having a higher dividend. But there's 2 big things that I'm looking at as well, too. One of them is the payout ratio. Now, both of them are over the 60% because Coca-Cola is at 87% and the Pepsi company is at 76%. So not ideally where I would like them to be. But obviously, as you can see, Pepsi has a better payout ratio. But the thing that I love the most when it comes to paying attention to dividend paying companies is probably their growth rate. Not necessarily just their 5 year, because you saw I looked back and was paying attention to how their last couple of years have done too. Because maybe their growth from 5 years ago was stellar, but then it started slowing down, and things can get skewed a little bit. So that's why we looked into their last couple of years. So Pepsi is at 8.41% and Coca-Cola is at 5.57%. And we did go back and look, and Coca-Cola has the last couple of years a little bit smaller growth than what Pepsi has had. So one other really big thing that I kind of want to mention as well too, because I know people kind of talk about this as well, and that's the share price. So a lot of times when coming up with the decision of which company to go with, people make the really strong decision of, should I go with a company because of their actual stock price? Because Coca-Cola is trading at $49.09 and Pepsi is sitting at $132.44. Now, from an outside perspective, somebody might see, well, technically Coca-Cola might be a better value because it is a lower dollar cost to get in. But the beauty of fractional shares that are kind of becoming more of a normal thing through a lot of brokers is that the actual price point to get into a company is not really relevant anymore whatsoever. And the reason for that is because if you own half a share of Pepsi, right over here, you can see, you will still get half of that dividend that they are paying out. So if you see the payout ratios of, this annual payout for for Pepsi is $4.09, and the annual payout for Coca-Cola themselves is $1.64, you can see the fact that just because you have a whole share of Coca-Cola at $50, and then let's say you put that $50 into Pepsi, you will still be getting, that looks all messy, you'll be still getting a healthy amount of this dividend just because you own that fractional share. Because all the fractional shares that you're buying, you also still get the fractional part of those dividends, which is a really powerful thing. So you don't have to be worried about the actual price point. And that's not really what I'm ever worried about when it comes to the actual price of the stock. I just more so worry about the actual implications of everything else that's going on when it comes to the dividend. Of course, when it comes to their debts as well too, when it comes to their earnings. And those are things that I also look at on the side. But for this video in particular, this was all just about their actual dividend summary and the different opportunities that I have for either Coca-Cola or Pepsi on both sides. So at the end of the day here, when I'm looking at Pepsi and I'm looking at Coca-Cola, I do like them both. I think they both have a lot of structure when it comes to paying out their dividends. It's just astonishing when you think 57 years of paying out dividends, but also having that dividend growth, year over year is pretty, stellar for me personally. But that's not always going to be the biggest factor for me, because I also want to have my money be worth more in the future because of inflation. So I think if I end up deciding to only keep one or the other, I think my thoughts on the idea is going to be ending up leaning towards Pepsi over Coca-Cola, mainly because of that dividend growth over the years. I would rather have my money growing faster year over year than kind of having it stay in place and maybe be worth a little bit more in the short term, but not as much in the long term, because that's what I'm trying to play here when it comes to my dividend portfolio, which is having this income long term, having this income available for me, 10, 15 years down the road, and not necessarily today. So for somebody who's trying to build up that dividend income for the future, I think Pepsi is going to be the better option. I'm not saying that Coca-Cola is a bad option. I just think out of the two, that's going to be the one I lean towards more. And if you're interested if whether I keep Coca-Cola or not, definitely be following my investing journey here on the platform, because I do share what I'm investing in, what I have in my portfolio, and how it's kind of all working out for me, so you guys can have a good understanding of a journey through dividend investing as well. Now, if you like the idea of creating dividend income for the future and then also having the opportunity to invest in fractional shares, check out my link down below for M1 Finance. That is the service I personally use when it comes to investing. It's free to use and it's a really great system to be able to set yourself up for success when it comes to investing. Now, I want you to keep on learning and watching these videos about dividend investing, so check out my video right over here to keep on learning. Thank you so much for watching, and I'll see you in the next video.